The Venetian Credit Web. It began with whispers drifting through narrow canals, murmurs of a system so advanced that even seasoned merchants struggled to grasp its full reach. Venice, a city built on water, had constructed something far more fluid beneath the surface, a network of credit so intricate that it bound continents together without a single cannon fired. It was invisible power, woven from ledgers rather than laws. To understand how Venice's financial web shaped centuries of trade and diplomacy, we need to return to an era when the city reigned as the commercial crossroads of Europe. Empires rose and fell around it, but Venice endured, not through conquest, but through calculation. While other states relied on armies, Venice relied on contracts, promises, and the disciplined architecture of credit. Today, echoes of this system remain in every modern financial network built on trust rather than metal. Venice was doing it long before the rest of the world caught up. The story begins in a republic that prized order in the midst of chaos. Its merchants sailed farther than rivals, negotiating deals in ports where uncertainty was the only constant. To survive, they needed more than courage, they needed a system that could stabilize risk across oceans. Venetian bankers recognized this and devised methods that transformed trade into something predictable. Letters of credit replaced gold. Clearinghouses replaced guesswork. And trust, once fragile, became a tool sharpened to near perfection. At the center of it all stood institutions whose power few outsiders fully understood. They mapped every transaction, every debt, every promise. As long as the ledgers balanced, Venice prospered. But as the web expanded, linking investors in Florence, traders in Alexandria, and financiers in Constantinople, the stakes rose with it. Every thread supported another. Every promise relied on countless unseen hands. And that delicate complexity, so brilliant in its design, also carried a faint but growing vulnerability. For beneath the elegant system lay a truth the Republic rarely acknowledged. A web strong enough to hold the world together can also unravel from a single break. And long before the cracks became visible to the public, those closest to the ledgers sensed that the pressures gathering beyond the lagoon were beginning to test the limits of Venice's extraordinary creation. The web grew denser with each passing decade, its threads stretching across seas and deserts, binding distant ports to Venice with obligations as strong as chain and iron. Merchants praised its elegance. Diplomats admired its reliability. Even rival states grudgingly relied on Venetian credit when their own systems faltered. The Republic had not merely built a network, it had built a lifeline the world depended on. But inside the counting houses lining the Grand Canal, unease took root. Clerks noticed that accounts once predictable now fluctuated with alarming irregularity. Trade routes long considered safe became vulnerable to storms, piracy, and shifting alliances. Ventures that had always yielded steady profit began showing unexpected losses. The numbers, once the steady pulse of Venetian commerce, beat with a new and unsettling rhythm. Meetings behind closed doors revealed deeper concern. Some bankers argued that the Republic's influence had grown too large for its own stability. Venice had become the guarantor for too many partners, the creditor of too many uncertain ventures. If even one major debtor failed, the shock could ripple through the entire network, tightening the web until it strained under its own tension. Others insisted that scaling back now would invite competitors to seize advantage. Pride and pragmatism collided in every discussion. Meanwhile, foreign powers watched Venice's financial dominance with rising suspicion. They questioned how a city of such modest size could wield influence eclipsing empires. Some envoys reported that Venetian bankers could predict political outcomes before negotiations even began. Others claimed the Republic's intelligence network, famous for its efficiency, fed the banks with insights no rival could match. Whether these rumors were true mattered less than the fear they created. The cracks that formed were small, but they multiplied. A shipment lost in the eastern Mediterranean forced multiple merchants into temporary default. A drought disrupted grain deliveries, destabilizing markets already stretched thin. Each incident added stress to a system designed to manage risk but never intended to absorb so many shocks at once. Still, the public saw only prosperity. Markets bustled. Ships thronged the harbor. The illusion of invincibility remained intact. Inside the banks, however, the tension sharpened. Ledgers showed liabilities creeping upward. Reserves dipped. Some partners demanded earlier settlements, uneasy about Venice's growing exposure. In response, bankers quietly adjusted practices, shortening credit terms, raising interest rates, imposing stricter rules on borrowers. These measures steadied the numbers but strained relationships. Foreign merchants grumbled. Local investors questioned the Republic's direction. Despite it all, the web held, at least on the surface. The complexity of Venetian finance, once its greatest strength, now concealed fragilities that few could see clearly. The city that had mastered the art of balancing risk began to sense that balance slipping. And as pressures mounted, a troubling truth emerged: the more intricate the web became, the more catastrophic its unraveling would be. A single break, one failure, one miscalculation, one turn of fortune, could send shockwaves through the entire system. The guardians of the ledgers saw it coming before anyone else. What they didn't yet know was how close that break truly was. The first true rupture came disguised as routine misfortune. A convoy bound for the eastern markets vanished in a storm, taking with it cargo financed almost entirely through Venetian credit. Losses of this kind were expected from time to time, yet what followed exposed how delicately the Republic's financial machinery had been stretched. Merchants tied to the shipment struggled to meet obligations. Their defaults cascaded through the ledgers, revealing connections so dense that even clerks seasoned by decades of service felt a flicker of dread. The web had tightened to the point where one snapped thread tugged at dozens more. Inside the great banking halls, tension flared. Executives demanded immediate assessments, only to discover that exposures long dismissed as minor now carried dangerous weight. Some accounts rested on ventures already strained by shifting political winds. Others depended on supply routes threatened by new conflicts. What had once seemed manageable loans spread across continents now resembled a fragile lattice shaped by promises that could no longer be guaranteed. Rumors drifted through the Rialto markets like smoke from an unseen fire. Traders noticed unusual delays in payments. Brokers whispered that certain powerful families were liquidating assets under the guise of reinvestment. Even the gondoliers, who ferried cargo and gossip in equal measure, sensed unease settling over the city. They spoke of bankers pacing along the waterfront at dusk, their faces etched with concern they tried and failed to mask. Venice's government, ever vigilant, pressed the banks for clarity. Doge and council demanded reassurance that the Republic's financial core remained unshaken. But reassurance was difficult to give. Some officials argued that the crisis was temporary, a storm that would pass once markets stabilized. Others feared that the very architecture of Venetian credit, admired for its complexity, had become so intertwined that no single institution could isolate its risk. The debate grew more urgent as new disturbances rippled across the Mediterranean. Then came the event that transformed concern into fear. A prominent trading house, whose influence spanned from Alexandria to Bruges, reported catastrophic losses from a failed expedition. The blow reverberated through every corner of Venice's financial world. Dozens of merchants depended on that house for liquidity. Dozens more stood exposed through joint ventures. Suddenly, letters of credit once considered unshakable were treated with caution, even suspicion. Trust, Venice's most precious commodity, began to fracture. On the exchange, prices shifted erratically as partners scrambled to assess who still held firm footing. Investors withdrew funds in quiet but steady trickles. Some demanded settlement in metal rather than paper, unwilling to rely on promises that now felt uncertain. Even the famed Venetian insurers, long celebrated for their discipline, hesitated to issue coverage without demanding steep premiums. The city that had perfected the management of risk now found itself confronting an unfamiliar, unsettling truth: risk was no longer distributed, it was concentrated. Behind the closed doors of midnight meetings, Venetian leaders confronted a grim realization. The web they had spun to connect the world had also trapped them within it. Every obligation was entangled with another. Every safeguard relied on someone else's stability. And as more threads tightened under pressure, the intricate system that once made Venice invincible now threatened to become the mechanism of its undoing. Whispers filled the city: could the Republic withstand a break of this magnitude? How far would the shock spread? And if the web began to unravel, would Venice be able to stop it before the currents of global trade pulled it under? The answer was approaching faster than anyone wished to believe. The collapse did not announce itself with a single dramatic moment. Instead, it unfolded like the slow tightening of a tide, drawing Venice into a crisis that had been years in the making. Each day brought another sign: a merchant unable to settle accounts, a trading house delaying payments, a foreign partner demanding guarantees the banks could no longer confidently provide. The city that had mastered the art of financial poise now felt tremors in every corner of its once stable economy. At dawn one morning, the tension finally broke into the open. Crowds formed along the Rialto Bridge, a place where news traveled with the speed of wind. Bank messengers rushed through the markets, carrying instructions that changed from hour to hour. Rumors swirled that one of the oldest institutions in the Republic had halted withdrawals. Others claimed that emergency reserves were already depleted. No one knew which stories were true, but everyone felt the weight of uncertainty pressing against the city's heart. Inside the palazzo where Venice's financial leaders convened, the scene was stark. Tables were covered with ledgers showing obligations that outstripped available reserves. Every solution demanded sacrifice. Restricting withdrawals risked sparking panic. Honoring them risked draining the entire system. Cutting credit lines could stabilize the banks but suffocate trade. Extending them could delay collapse but deepen the eventual damage. The Republic's greatest strength, its interconnectedness, had become its greatest vulnerability. Government officials arrived, their expressions solemn. The Doge listened as advisors outlined the peril: multiple major trading houses on the brink, insurers exposed to losses they could not cover, and credit chains stretched so thin that a single large default could topple the entire network. The council faced a decision that would define the city's future. They could allow the failing institutions to collapse, accepting the devastation that would follow. Or they could intervene, injecting emergency capital and imposing oversight that Venice had long resisted. The choice was made not with triumph, but with necessity. The Republic would step in, stabilizing its most critical banks while forcing a sweeping restructuring of the credit system. Terms were drafted with speed and precision. Riskier ventures were wound down. Oversight committees were formed to audit accounts once considered untouchable. The age of unchecked expansion was over. Venice would survive, but not unchanged. When the announcement reached the public, the reaction was complex. Merchants exhaled with relief, grateful that the Republic had prevented a full collapse. Yet sorrow lingered too. The crisis had shattered illusions of invincibility. The Venetian Credit Web, admired for centuries, had revealed its fragility in the harshest possible way. In the months that followed, ships continued to sail, but with more caution. Banks reopened their doors, but under new rules. Ledgers regained their balance, though never again with the effortless confidence of the past. The Republic learned that even the most sophisticated systems require boundaries; without them, brilliance becomes brittleness. And while Venice recovered, the world paid close attention. Future financial centers would study the crisis, adopting lessons that shaped the foundations of modern banking. They learned that complexity must be managed, that trust must be protected, and that no network, no matter how elegant, can stand forever without discipline. In the end, Venice's credit web left behind a legacy deeper than its collapse. It showed how power can be built without armies, how commerce can shape empires, and how even the most intricate designs must evolve to survive. Its story is a reminder that in finance, strength is not found in the shine of prosperity, but in the resilience of systems prepared to face their own limits. Subscribe and step into the story.